Hello, my name's Rachel and welcome back to my channel. So in today's video I am talking about why I am continuing to invest in the stock market despite it falling considerably recently and despite much news and media talk of potentially falling into a recession. So in the last 6 months alone, Vanguard's VUSA, which tracks the S&P 500 index, is down 10.71%, and that is in just 6 months alone. There's also concern over rising interest rates in the US and also the cost of living here in Europe, which has obviously impacted me as I'm here in the UK. Now, I think it's really important to always be honest in this channel, and I'm going to be honest and say that I have found it very, very difficult to continue investing at this time. It's not very motivating continuing to invest when you're seeing your investments fall, particularly with the cost of living at the moment. Any hard-earned money that is put into investments, to see it fall maybe a couple of percentage points in a day is not nice at all. However, investing for me has always been part of a long-term plan and a plan which I want to stick to. So to give you a bit of backstory, I have been investing for a few years now, and pre-2020 just saw investments that I had maybe rise around 10% a year, which was fantastic. Then I started this channel in 2020, and after the March 2020 crash, everything you invested in pretty much turned to gold. So investments that I had in specific funds that I had invested in that had maybe gone up 10 or 15% the previous few years were going up over 100% in a year. And then individual stocks and shares that I was invested in, a couple of them were going up 400 to 500% in less than a year. So I was seeing huge gains, and obviously that was very, very exciting. And I think that's what motivated me, in all honesty, to start this channel, because it was very exciting to see my investments do so well. However, at the moment, most people's investments are not doing particularly well, and as I said, the S&P 500 is down at 10.71% in the last 6 months. So the lure of investing is definitely not as high. It's not as motivating to start investing at the moment, and it's not particularly motivating to continue to invest, but that is something that I want to do. I will continue to invest as and when I can, hopefully on a monthly basis or in lump sums. And in this video, I'm going to include a few key points as to why I will continue to invest. A couple of them I have taken from The Psychology of Money, which is a book I read a long time ago and have recently reread just to kind of confirm my standpoint, as it can be difficult to continue investing, as I said, at times like this. So I also wanted to stress before I get into this that I do have a cash buffer available. So I have an emergency fund on the side, and I think it's really, really important to have something like this if you are investing in the stock market. I'm absolutely not going ahead and investing every single penny that I can into the stock market at the moment. So for me personally, it's so important to have an emergency fund. We have young children in our family. We also have a large mortgage to pay off, so I certainly don't want to be investing everything I have into the stock market. So as I said, I wanted to include a couple of quotes from The Psychology of Money which really illustrate my viewpoint and help to explain why I want to continue investing in the stock market at the moment. As always, personal finance is very, very personal. Your personal decisions and your personal investing plan will be very, very different to mine. So this is what I'm personally doing. Okay, so this quote is from page 76 of The Psychology of Money. Consider what would happen if you saved $1 every month from 1900 to 2019. You could invest that $1 into the US stock market every month, rain or shine. It doesn't matter if economists are screaming about a looming recession or a new bear market. You just keep investing. Let's call an investor who does this Sue. So in this example, I would like to think of myself as Sue, although Sue is not my name's Rachel. But maybe investing during a recession is too scary, so perhaps you invest your $1 in the stock market when the economy is not in a recession. Sell anything when it's in a recession and save your monthly dollar in cash, and invest everything back into the stock market when the recession ends. We'll call this investor Jim. or perhaps it takes a few months for a recession to scare you out, and then it takes a while to regain confidence before you get back in the market. You invest $1 in stocks when there's no recession, sell 6 months after a recession begins, and invest back in 6 months after a recession ends. We'll call you Tom. How much money would these 3 investors end up with over time? Sue, who's the person that did the dollar cost averaging despite any recessions, ends up with $435,551. Jim has $257,386. Tom has $234,476. Sue wins by a mile. There were 1,428 months between 1900 and 2019. Just over 300 of them were during a recession. So by keeping her cool during just the 22% of the time the economy was in or near a recession, Sue ends up with almost 3/4 more money than Jim or Tom. So that kind of helps me feel a little bit more comfortable about investing around a recession or in a recession. So I hope that illustrates the reasoning as to why I'm continuing to invest despite the current economic climate. I also thought it was important to mention that this book was first published in 2020, so that is why it includes the figures up to 2019. The next section that I want to read to you from this book is from the Seduction of Pessimism chapter, which is chapter 17. More than half of all American households directly own stocks. Even among those that don't, the stock market's gyrations are promoted so heavily in the media that the Dow Jones Industrial Average might be the stock-less household's most watched economic barometer. Stocks rising 1% might be briefly mentioned in the evening news, but a 1% fall would be reported in bold, all-caps letters, usually written in blood red. The asymmetry is hard to avoid, and while few question or try to explain why the market went up, isn't it supposed to go up? There is almost always an attempt to explain why it went down. Are investors worried about economic growth? Did the Fed screw things up again? Are politicians making bad decisions? Narratives about why a decline occurred make them easier to talk about, worry about, and frame the story around what you think will happen next. Usually more of the same. So as I said, my long-term plan is to continue investing into my investment ISA and also into my self-invested personal pension. So I'll continue to invest in ETFs, in index funds. I'll also carry on investing in actively managed funds and actively managed trusts as well. So I will continue investing despite the looming recession. We'll see what happens. I don't have a crystal ball. I obviously don't know what is going to happen in the stock market in the coming weeks and months. There are so many different factors at play at the moment. But for me personally, the decision that I want to make is to continue investing. Thanks so much for watching, and I hope you have a lovely day. Bye bye.